I just read The Man Who Solved the Market. In my opinion, it is the ultimate page-turner that delves deep into the life of a genius mathematician turned hedge fund manager. The book is about Jim Simmons, the man who not only left the ivory towers of academia but also went on to conquer Wall Street like a boss. But that's not all, folks. The real star of the show is the legendary Medallion Fund, the crown jewel of Jim Simmons' Renaissance technologies. This exclusive fund is so exclusive that it's only open to employees. And boy, has it been crushing it. With an average annual return of over 66.1% since 1988, it far surpasses any other hedge fund even after its dubious management fees, bringing the average return to 39.1%. If you thought finance and math were boring, think again. Get ready to be wowed and inspired by the incredible story of Jim Simmons and his mind-boggling success in the world of hedge funds. Jim's story.
Well, the short talk is this. I did a lot of math, I made a lot of money, and I gave almost all of it away. That's the story of my life. Now,
Born on April 25, 1938 in Brooklyn, Massachusetts, Simmons' love for numbers began at an early age. He went on to study mathematics at the prestigious Massachusetts Institute of Technology, earning his bachelor's degree in 1958. Simmons' insatiable hunger for knowledge led him to the University of California, Berkeley, where he earned his PhD in mathematics in 1961. And just when you thought he couldn't get any more impressive, he went on to become a codebreaker during the Vietnam War, working with the National Security Agency. Simmons' thirst for adventure and intellectual stimulation never waned, and he continued his quest for knowledge as a member of the research staff at the Institute for Defense Analysis until 1968. After teaching mathematics at two of the most prestigious universities in the world, MIT and Harvard, Simmons was appointed as chairman of the math department at Stony Brook University. But that wasn't enough for this intellectual powerhouse. His restless mind kept seeking new challenges, and he soon ventured into the world of finance. The Quant King. In 1978, Simmons founded a hedge fund called Monometrics. He was determined to use his expertise in mathematics to revolutionize the world of finance. And boy, did he succeed! Simmons realized that pattern recognition could be applied to trading in financial markets and developed a system with quantitative models. Founded in 1982 by Jim Simmons, Renaissance Technologies quickly gained fame for its innovative approach to investing. Simmons, a mathematician and former codebreaker for the National Security Agency, understood the power of quantitative analysis and algorithmic investment strategies like no one else. And it paid off big time. Renaissance Technologies manages a whopping $55 billion as of 2022, and its Medallion Fund, which relies entirely on black box strategy and is open only to Renaissance's owners and employees, is worth a staggering $10 billion. It's no wonder that Simmons has been hailed as the Quant King, and Renaissance Technologies as one of the most successful hedge funds in history. With a team of brilliant mathematicians, statisticians, and physicists, Simmons revolutionized the world of finance with his algorithmic trading strategies. Simmons' reign at the helm of Renaissance Technologies was nothing short of remarkable, serving as chair and CEO until his retirement in 2010. His contributions to the world of finance and mathematics will undoubtedly continue to inspire generations to come. Now, everyone wants to know how Jim Simmons solved the greatest mystery of all time: making money. Many believe that his methods were too technical to follow. Others just wanted to satisfy their curiosity. To help make this easier, an author named Gregory Zuckerman decided to put it all in a book called The Man Who Solved the Market. The Medallion. Behold, the Medallion Fund, the crown jewel of Renaissance Technologies, a hedge fund like no other. This enigmatic fund is shrouded in mystery, open only to Renaissance's employees and consistently outperforming the market for almost 30 years. Brace yourselves for some staggering numbers. Since 1988, the Medallion Fund has grossed a mind-boggling 66.1% average annual return, netting investors an average annual return of 39.1% after hefty management fees. Here's a fun fact that will blow your mind. If you had invested $1,000 in the Medallion Fund back in 1988, your investment would have grown to over $23 million by 2018. After fees. Yeah, you read that right. $23 million. But here's the kicker. The Medallion Fund is the only hedge fund of significant scale that has consistently beaten the market returns of index funds for any consistent period of time. In fact, most hedge funds that perform well in a given year end up losing more in subsequent years. That's because their success attracts more assets, leading to a deviation in their strategy or a reversion to average returns. So what's the secret sauce behind Renaissance Technologies' incredible success? While the fund is notoriously secretive, the book about Jim Simmons sheds some light on the practices that help the Medallion Fund consistently outperform its peers. While we won't give away all the secrets, we'll share some fascinating insights into what led the phenomenal success of Renaissance Technologies. Renaissance Technologies strategies.
So how on earth did you do this, Jim?
Well, I did it by assembling a wonderful group of people. When I started doing trading, I had gotten a little tired of mathematics. I was in my late 30s. I had a little money. I started trading, and it went very well. I made quite a lot of money with pure luck. I mean, I think it was pure luck. It certainly wasn't mathematical modeling. But in looking at the data, after a while, I realized, hey, looks like there's some structure here. And I hired a few mathematicians, and we started trying to make some models. Just the kind of thing we did back at IDA. You design an algorithm, you test it out on a computer, does it work, doesn't it work, and so on.
It is interesting to note that Renaissance Technologies' success is largely attributed to its early adoption of algorithmic investing and the use of historical data to inform trading decisions. This approach allowed the firm to identify recurring trading sequences and patterns that were not easily visible to human investors. Moreover, the firm's ability to collect, store, and analyze large volumes of data using advanced computing systems allowed it to develop complex trading algorithms that could identify profitable opportunities in real time. Renaissance Technologies also focused on finding anomalies and omissions in the market data, which enabled it to capitalize on market collapses and other expected events. Another crucial aspect of Renaissance Technologies' success was its emphasis on simplicity in trading strategies. Instead of trying to understand the underlying reasons behind trading patterns, the firm focused on identifying patterns that could be exploited in a predictable and actualizable way. Overall, Renaissance Technologies' early adoption of algorithmic investing, its focus on data analysis and simplicity in trading strategies, and its ability to capitalize on anomalies and unexpected events have been key factors in its success. At Renaissance Technologies, price data was viewed through the lens of a Markov model, where each state encapsulated all the information about the past and future expectations. From bad crop yields to anticipated tariffs, everything was reflected in the current price. The team knew that price was the ultimate arbiter in finance. Using this approach, the team was able to derive the next price point from the previous one. While this was an oversimplification due to the likely path dependency of prices, it was still a valuable tool for predicting market trends. With a team of mathematicians, scientists, and engineers, Renaissance Technologies was acutely aware of the pitfalls of data mining, overfitting, and spurious signals. They knew that taking a reductionist view of finance required honesty and discipline. By acknowledging the limitations of their approach, the team was able to develop effective models that generated significant returns. That's the explanation on Jim Simmons' strategy that broke the code of Wall Street. What do you think? Did this man cheat his way to the top using algorithms, or was he just a smart man who knew how to use math to exploit loopholes? Share your views in the comment section below, and don't forget to like, share, and subscribe to our channel for more financial giants around the world. Till we come your way again, bye for now.